indeed another Thank God Friday to the start of the weekend. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's the 22nd of May. We thank you for joining us at this time on the show.
All right, let's begin with news now. The Central Bank of Egypt kept its key interest rates unchanged for the second straight meeting in 2026, leaving the overnight deposit rate at 19% and the lending rate at 20%. The central bank said the decision reflects recent inflation trends and global uncertainty, with markets expecting policymakers to hold rates steady and higher energy prices amid higher energy prices and current volatility. The CBE also raised its inflation forecast, now expecting average inflation of 16% to 17% in 2026 and 12 to 13% in 2027, higher than previous estimates of 11% and 8% respectively. In Kenya, William Ruto has announced a cut in diesel prices in response to public protests over high fuel costs that have pushed up living expenses and disrupted transport services. The government said diesel prices will fall by 10 Kenyan shillings per litre in the June to July pricing period, with the move aimed at easing household pressure and stabilizing fuel prices following a violent transport strike that left several people dead and injured. Ruto said the cut will be supported by a government-to-government fuel supply deal to stabilize imports amid global disruptions, adding that about 28.1 billion Kenyan shillings has already been spent on fuel relief measures, including tax cuts between April and June. In other news, Fatir Barrow, Executive Director of the International Energy Agency, has warned that the Strait of Hormuz crisis poses significant risks to global energy security and market stability. He said any disruption in the strategic oil and gas shipping routes could have immediate impacts on global supply chains and energy prices, reinforcing the need for coordinated international response and resilient energy systems. Let's listen.
The amount of oil and gas lost vis-a-vis the attention from governments, I saw a major décalage, major gap there. So it is not well appreciated. So I went to check the numbers with my colleagues, and I decided to go out to call it the largest energy crisis in the world. Why? It's very simple. Up to now, we had three major energy crises: 73, 79, two major oil crises, and 2022, after the Russia invasion of Ukraine in Europe, the gas. So these three of them. These are three largest ones until now. In 1973, the world has lost 5 million barrels per day of oil. 79 also 5 million barrels per day. Put together, in both of the two largest oil shocks in the world, we lost 10 million. And in this crisis, we already lost 14 million, much higher than that.
Much higher than both put together?
Put together, combined. And for gas, in Europe, after the Russia cut the gas, we lost about 75 BCM, and we now lost more than 130 BCM. So it means this crisis is bigger, I would say much bigger, than all three crises in the history put together. Plus, there is an important plus that many people, especially in the energy industry, don't see it clearly. The huge amount of other vital commodities pass through the Strait of Hormuz, such as fertilizers, such as petrochemicals, such as helium, such as sulfur, and this will have major implications for the world, for the economy, and for many countries, especially those in the developing and emerging world.
Ghana Bank of Ghana has announced that Ghana is expected to launch its first non-interest banking institution in 2026, marking a major step in diversifying the country's financial sector. The governor, Dr. Johnson Pandes Asiema, said one indigenous bank has already applied for a non-interest banking license, while 4 others are preparing applications as regulatory frameworks near completion following guidelines issued in January 2026. He added that the framework is aligned with international best practices to ensure safe and effective implementation, with the first license expected to be issued later this year. In South Africa, industry leaders from across the equity market ecosystem gathered for the JSESA Trade Connect 2026 conference, South Africa's premier market structure forum. The event brought together buy-side and sell-side institutions, technology providers, and market infrastructure players to discuss market innovation, emerging products, and capital market development. Here are excerpts.
Of course, I mean, volatility, if I look at it from the full value chain perspective, is something that we thrive on. I think where we are moving toward is a much better ability to cope with it. As we build out our data sets, as we connect data sets from previously disparate sources, I think, our ability to interpret that data quickly and our ability to respond as quickly as possible is really what it's about. So, you know, I think if we look at technological advances in terms of applications, AI tooling, data consolidation, we're in a much better position now than obviously we were even 5 years ago, let alone 15 or 20 years ago. So, you know, I think managing volatility for all of us is just becoming more and more part of our fabric. And, you know, we have a little joke at the JSE when we're feeling very sorry for ourselves. We say, you know, the days of the single black swan are long gone. There's a flock of black swans that hit you, and it's persistent. But, you know, if I look at, for example, the performance of our market, going back 5 or 6 years pre-COVID, and how well we have actually been able to get through that really well, notwithstanding a few bruises here and there, I think is testament to the progress that we are making in terms of the tooling and transparency. There's obviously a long way to still go. There will always be work to be done in this space. But I think, you know, you speak about opportunity. One often thinks about opportunity from volatility in the commercial sense. You know, how do I make more money off more trades? As a risk practitioner myself, I do think about the opportunity that I now have in having more data and better tooling available to me to actually be able to foster safer markets. Of course, I mean, volatility...
In earnings news, Afreximbank reported resilient performance for the 3 months ended March 31, 2026, with continued balance sheet growth and strong deal execution despite a challenging global environment. Total credit exposure rose 2% to $42 billion, while average loans and advances increased 8% year-on-year to $32 billion, supporting higher interest income and reflecting the bank's role in financing trade and infrastructure across Africa and the Caribbean. Profit for the period rose to $268.9 million from $215.4 million a year earlier, with strong asset quality maintained, liquidity at $5.6 billion, and a capital adequacy ratio of 23%, underscoring a strong and well-capitalized position. In the meantime, business leaders and government officials from Botswana and South Africa gathered for the Botswana-South Africa Business Forum, focused on strengthening trade and investment ties between the two countries. Cyril Ramaphosa and Duma Boko addressed the forum, highlighting opportunities to expand regional trade, industrial cooperation, and private sector partnerships. Let's listen.
We seem to converge, both from the side of government and from the side of business, on what the challenges are and what the solutions might be. I propose to deal with practically one issue and one issue only, and very briefly at that. There's a whole institutional array, an array of institutions in Botswana and in South Africa, each of which executes a defined mandate in exercise of the sovereign power vesting in each republic pursuant to which those institutions were established. These institutions operate in accordance with the laws of the different countries, policy frameworks, processes and practices, and habits.
To have this business forum on the margins of the 6th Binational Commission between Botswana and South Africa is a real joy. This is the first iteration of this business forum. We've decided that we want to make the business forum a permanent feature of all our binationals as we consider other forums. Over the last few days, our ministers and officials have discussed the measures, various measures to strengthen our political, social, economic, and security relations. They've done considerable work, and even as you are business people, I would like you to applaud the work they've done, which has now been released as a communique. Let's give them recognition and a round of applause. In my meetings earlier, the tete-a-tete and other meetings that we've been having with President Boko, we agreed that one of our greatest tasks of the moment is to further deepen trade and investment relations between our two countries. Business has a critical role in achieving our national ambitions for shared and sustainable prosperity.
We seem to converge.
Finally on News Now this Friday, Morocco's annual inflation rate rose to 1.7% in April from 0.9% in March, according to the Statistics Agency, with food and transport prices driving the increase. Food prices inched up 0.6% year-on-year, while non-food prices rose 2.5%, and transport costs jumped 8.4% following higher fuel prices linked to the Middle East conflict. Core inflation fell 0.3% year-on-year, but increased 0.1% month-on-month as the government plans an extra 20 billion dirhams in the 2026 budget to support subsidies for transport, gas, and electricity prices. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly after the break with Grace at the FMDQ Archives Room giving us our market updates.
The Monetary Committee decided to reduce the monetary policy rate by 25 basis points to 13.25%. In arriving at this decision, the committee took into account a number of factors. Chief among those were, first, the expected favorable maize harvest during the current crop marketing season. Secondly, the observed relative stability in the exchange rate of the kwacha against the United States dollars. And thirdly, that the upside risks and uncertainty that is associated with the Middle East conflict warranted a cautious adjustment to the policy rate that maintains an appropriate stance of monetary policy. I think the best interpretation of that is that given where inflation is, even with this 25 basis points reduction, monetary policy still remains very active.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for updates on how the markets wrapped up on this last day of the week. Hello there again, Grace.
Hi, Melissa. Let's now take a look at how the markets ended trading for the week, starting off with the equities. The NGX All-Share Index gained 0.16%, while the BRVM in Abidjan slipped 0.18% to 420.81. The Nairobi Securities Exchange rose 0.22% to 206.21. In the South, the Johannesburg Stock Exchange declined 0.56%, while Mauritius Semdex dropped 1.01%. And in North Africa, Morocco's MASI advanced 0.79% to 18,449.84. Let's do a quick random of the Pan-African currencies. The Rand weakened 0.07% to 16.43, while the Egyptian pound was flat at 52.92. The CFA franc eased 0.13% to 565.74, and the Kenyan shilling weakened 0.14%. The Moroccan dirham slipped 0.17% to 9.24, and the naira weakened 0.25% to 1,372 naira 51 kobo as at 12:55 GMT. Let's now switch into the commodities data deck, beginning with energy prices. Brent crude rose 0.86% to $103.46, while US WTI gained 0.28% to $96.62. Natural gas fell 1.16% to $2.98, and Arabic gasoline climbed 1.60% to $3.43 as at 12:51 GMT. To metals prices, gold slipped 0.54% to $4,518.10, while copper gained 0.96% to $6.35. Platinum declined 1.47%, aluminium rose 0.83% to $3,640.65. Iron ore edged down 0.27% to $109.79 as at 12:52 GMT. Now finally, to soft prices. Cocoa dropped 2.18% to $3,685. Coffee slipped 0.59% to $271.80. Cotton was broadly flat, up 0.01% to $77.99, and palm oil gained 0.47% to $1,116.49, and sugar fell 1.95% to $14.61 as at 12:53 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up today. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios. We say thank you very much for watching and have a splendid weekend, everyone.